And if you haven't noticed, lately I've been pretty what would be called bearish. But I got to tell you, after today's stories, I'm feeling tremendously bullish. And I'm going to tell you exactly why. So we're going to go over the good, or actually we're going to go over the bad first, and then we'll slip into some okay news, and then some fantastic news. So we're going to talk about regulations from New York and Biden, Bank of America, they can't see the crypto winter coming. We're going to talk about FTX offering stocks within a couple of months, and they're already rolling out to people in the US. And then lastly, we'll finish up with probably the most bullish sentiment and story I've read in like a long time. And then at the very end, we'll do Q&A and we'll do a little mix-up. And I'll explain that in a bit. So first of all, if you're here for the live stream, thanks. I do appreciate it. Just know that if you're here for the recording, timestamps will be underneath so you can just skip around. But it just makes sense to go all the way straight through. And let's just start with taking a look at exactly what's going on in our realm. And this is a picture that pretty much sums up exactly what I've been thinking, and I think you have for quite some time. This is the same thing that has been going on for a millennia, which is people will look at different prices of different assets and go, that's way too overpriced. And then and they always have this fear or this problem with, oh, I missed out. And then when it goes down lower, they're like, I'm not buying that. But in all honesty, this is when I am buying. I can't tell you what to do. This is not financial advice, just financial opinion, but it does make a lot of sense. And that leads me to today. And today's looking pretty good. I mean, I'm not super bullish because the price is up a little bit. Who cares, right? This could be a dead cat bounce. We don't know. TA experts will tell you whatever they got. But for right now, I mean, it's looking pretty good. Bitcoin's up a little bit. Take a little victory lap. 2.5%. Ethereum's up a little bit. BNB, Binance Coin, up a little bit. 2.7. Any big winners today? 2.6, 0.7. Kind of like sideways action. Flow was down -5%. All right. And off we go. And for me, I always take a look at these things and go, well, what's the market cap though? We're still at only $1.34 trillion. So don't take the big victory lap because it wasn't that long ago. We were over 3 trillion, just as a reminder. And then also, I still believe that we're a little bit correlated. And we can see that actually in the S&P 500. They are up just a little smidge today, as well as the NASDAQ. Actually, no, I'll take that back. NASDAQ dropped a little bit. NASDAQ dropped a lot. So I'm just going to tell you, if NASDAQ drops, I would not be surprised if the next hour to 2 hours or so, you start to see a little bit of drop as well. Could be wrong. That's what we got. So that's what's going on in the market. Let's go into a little bit of junk news, a little bad news. It depends on how you see it. And I'm going to have you tell me in the comments. So first up, Biden administration wants crypto exchanges to separate customer and corporate funds. Now on this channel, we've been talking a little bit about regulation. It's like the most unpopular topic to talk about in crypto. And it's really unpopular if you say that little regulation is good. That's what I think, especially with the stable coins. And I know people hate me for it, but you can voice your opinion in the comments. It's okay. It's all right. But for these types of things, this is what we got for a little regulation coming around. And just so you know, doesn't matter how much you don't want it, no matter how much you protest, it's coming. So get ready. So you can either hide behind it or have your voices heard by contacting whoever it is in your district, as far as your congressman or woman or senator, saying, this is what I would like. Please listen to my voice, because guess what? I pay your salary. All right. So here, this is what's happening. U.S. Presidente Joe Biden's administration will press Congress to demand crypto exchanges keep their customers' money separate from their corporate funds. And this was all about a story about how Coinbase, publicly traded company now, their recent disclosure that customers' money would be jammed up if the company declared bankruptcy. Federal officials tend to push U.S. lawmakers to fix the problem by insisting that a future legal framework requires crypto firms keep customer assets walled off, a separation. That's not always the case. That type of custodial rule is standard for financial firms such as futures, but crypto exchanges routinely mingle their funds. However, the securities industry commonly commingle the funds, but they also are a lot more heavily regulated. And here's a nice quote from a friend of the show, Gary Gensler. I know he watches. Hello, Gary. And he states, don't think you actually own your tokens when you go into a digital wallet. And he's talking, of course, there was a conference this week,
And this was his statements. And he actually is right here. He says, don't think you actually own your tokens when you go into a digital wallet. If the platform goes down, guess what? You just have a counterparty relationship with the platform and get in line in bankruptcy courts. And I got to tell you, I agree wholeheartedly with Gary. He's absolutely right. I mean, the guy did teach at MIT blockchain and cryptocurrency classes. So here's the thing. If you want to leave your crypto on exchanges, you've heard this many times, it's fine. Go right ahead. However, you are running a specific risk. And also, if you have crypto on the exchanges, just know that they can rehypothecate all those crypto tokens that you have, including Bitcoin, Ethereum, and everything else, and they can lend those out to third parties. Now, places like on Celsius, they will get collateral, but the question is, how much collateral do they actually get? And if they can't make it, do they pay it back? I'm not singling out Celsius. I've had Alex on the show last week. He seems to be on the up and up. However, it is something to consider. So remember, if you want to keep it on the exchanges and those exchanges go down, you're out of luck. And that's just the truth. Gary is 100% correct. All right, so to finish this up, when a firm takes a customer's tokens, they can use them as they will, of course. In fact, he states the exchanges are often trading against you. And since customers lost billions in the wreckage of Luna's algorithmic stablecoin, his investor protection advocacy could gain momentum. And that's the thing. That's the problem with when things go down. They're going to use that as a tool, and they're going to ram through stablecoin regulation, and it's going to be faster than what you can imagine. So that is a little bit of negativity, I would say. And there's also this. So New York Bitcoin miners are starting to give up on the state amid regulatory uncertainty. And I will just make a preface of this. I'm happy about this one, and I'm going to tell you why in a second. This is actually good news. So here's what we've got. Thus, the New York State Senate is looking at a bill calling for a 2-year moratorium on new crypto mining projects that use gas, coal, or other non-renewable energy sources after the assembly version of the bill passed the state's lower house last month. And what they're talking about here is back on April 26th, New York State Assembly passed a bill blocking new crypto miners that use non-renewable power. The bill would impose a 2-year moratorium, they couldn't get into it, on any new crypto mining firms that use a carbon-based energy source. Existing facilities weren't affected, or any that uses tap renewable resources. So that is in the Assembly. This is looking for the New York State Senate. And this is the quote. All crypto companies have a permanent hold on starting businesses in New York due to the political and regulatory ambiguity. Let me say that again. Due to the political and regulatory ambiguity, because no one knows the rules. If you give us the rules, we could bend those rules and we can actually make things work. The problem is you got to give us regulations so we can actually know where we stand. If the bill were to pass, New York would become a permanent afterthought for the industry. That's Kyle Schneps, Director of Public Policy at Foundry. They're based in New York, and they're also owned by CoinDesk's parent company, Digital Currency Group. Sure. Most crypto mining companies are staying away from the state because of authorities' seemingly negative stance for the industry. This is why it's good news. And I hate to be selfish. This is great news for Texas. Look, I like New York. Got some New York friends over there. Real great people, right? But if you don't want to pay taxes, New York sucks. And if you're from New York, just sound off. It's pretty ridiculous. And also the different regulations that they impose as far as like getting a bit license is ridiculous. Even Voyager, I mean, Steve Ehrlich was on the show just a couple of weeks ago. And he said, we're still battling with that. And they've been around for quite some time. They know what's going on. So if this forces miners out of New York, so much the better, because we've got a lot of Bitcoin mining going over here. There's a lot of job creation going on. Oh, and also we have really cheap renewable energy sources such as solar, wind, and gas. And guess what? People say, but it's so hot in Texas. Doesn't matter. We'll just sink those rigs into some cool immersion fluid, and we run off that risk and those problems. So if you have a problem in New York, Bitcoin miners, I got a great state for you. It's called Texas. I live here half of the year roughly, and it is fantastic. So I'm happy that this is happening, and it'll cause a vacuum. Welcome to Texas. So then to finish this up, prices are going up. Regulatory uncertainty, including the bill, is one reason why mining firms are less likely to move to New York. Increase in energy prices are another. Executive attribute the uptick in electricity rates to blah, 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 blah. Okay, so that's essentially the bad news. Sorry. And that's what it is. Now let's go into a little mid-range stuff. Bank of America can't see crypto winner. This is actually pretty good, but it does make me a little concerned. I'll tell you why. So Bank of America says crypto winter contagion risk concerns are overdone. And real quick, investors wondering why digital assets are not outperforming traditional ones should be aware that crypto ecosystem is an emerging tech asset class, and the tokens that power the ecosystem trade like high growth, speculative risk assets, which is exactly what we've been talking about. There's a reason why our market follows kind of in line. Now, look, it just went positive. Call me a liar, but still, it's up. Covers the NASDAQ or tech stocks, majority-wise anyhow. And of course, they're looking at this as a risk-on asset, just like they look at this. We want the institutions there, but of course, what are they going to do? They're going to say, well, if you want us here, we're going to treat you just like how we see you, even though I think that's the wrong play. Digital assets are faced with similar headwinds to traditional, including surging inflation, higher interest rates, and the increased risk of recession. And that's true right now. And I've been talking about this for quite some time, that it is a bearish sentiment because of those macroeconomic risks. But this is interesting. Worries of contagion risk within the crypto ecosystem and spillover effects in traditional financial markets due to the collapse of Terra or Luna. And I was just on a roundtable with Rob Nelson and a couple of other people like John and Jerry and Alex and Adrian. And one of them, I think it was Adrian, talked about it. He said, when everything went down because of Luna and a lot of people lost their money, I mean, that was pretty awful. He goes, but did you see how many whales moved in and bought a ton of Bitcoin? They bought hundreds of millions of dollars, $700 million worth of Bitcoin. He goes, so if you take a look at what's going on in the macro environment, and people will say whatever they say, don't listen to what they say, listen to what they do. And it was a great point, and I got to give him a shout out for that. So there is that part as far as Bank of America. But I will say they have been saying this, Bank of America has been saying this for quite some time. Actually, this is going back to March 1st. And, they said the same thing. They said, even though there's tightening, we don't really see it. And they don't even think that there's going to be a recession. They think maybe stagflation. So that's just middle of the road type stuff. But there is one part that was interesting to me. Where did it go? Alkesh Shah, the bank's lead digital asset strategist, explained that while the upside could be limited, it won't be a crypto winter given the growing levels of user adoption and development activity. They state analysts believe that slowdown in stablecoin inflows, or even outflows, the outflows of Bitcoin the second week in a row is indicative of a weakened investor in demand. And this is from March 1st. And if we take a look real quick this is from Crypto Quant, Bitcoin Exchange Reserves, we can see that, take a look at it. They're usually when people put their Bitcoin back on the exchanges like they did right here, you see a sell-off, especially as the price goes down. But if we can even zoom in, there really isn't a ton of people going in there and going, I'm going to sell off my Bitcoin. Just a little bit of a blurb on 8th of May, but now it falls back off again. So I can see how that would work out. So let me know what you think about that in the comments section. And then let's go to the bullish stuff. Here's the good news you're waiting for. I always like to give you two sides of the story or two sides of the sentiment, because if I just give you bullish stuff, you're like, well, that's just hopium. Where is the other side of that? Balanced, right? And this is what it comes down to. I got to tell you, this looks pretty good. Crypto exchange FTX expands into stock trading. And it's amazing to me how fast Sam and his team move. Here's what's going on. And this is not like pie in the sky like it's going to happen. It just happened. Crypto exchange FTX will let customers trade stocks and ETF on its trading app alongside Bitcoin and Doge. FTX on Thursday, that's the day, right? Yeah, will open access to its new stock trading services for a limited number of U.S. users. And that's the key. U.S. users, the people with the most pain in the A regulation, they're going to open it up to U.S. users. And that's what Sam said. It plans to expand the functionality to all American customers in the next few months. Let me read that one more time. It plans to expand the functionality to all American customers in the next few months. So imagine this. FTX is like, do you want to trade equities? Sure. Here you go. Do you want to do futures? That's going to come with someone. Sure. Do you want to have a lot more crypto to trade and buy up? Go right ahead. It's amazing to me how fast these guys move. They're entrepreneurs after my own heart. FTX plans to offer commission-free stock trading. That's not bad, like most major U.S. online brokerage firms. But the question I had was, well, if Robinhood also does that, but they do pay-to-order flow from Citadel. That's not so great. So how's that going to work out? Well, thankfully, this is Brett Harrison. He is the president of FTX US, and he says this. Brokerage services are offered by our broker-dealer, FTX Capital Markets. We've chosen to route customer orders directly to NASDAQ's order router instead of routing to markets makers and receiving payments for order flow. As the business matures, we'll continue to allow our customers full transparency and choice in order routing. FTX stocks will be available to all residents of all U.S. states, including New York. So I got to tell you, that's pretty good news. Let me know what you think about that in the comment section. Feels pretty good. We're gaining momentum. I like that. Now let's go on to, I think, the most bullish story of this week, the last 2 weeks. And I got to tell you, it's nice to have a little bit of hopium out there. This is big. And when I read this, just kind of let your mind flow about where things are headed and the kind of outlook that you really potentially should have as an investor. So here's what we got. This is Swiss asset manager Julius Baer eyes crypto and DeFi potential. Here's the thing. Who the heck are they? Well, Julius Baer, they manage $486 billion of CHF. And I was like, what the heck is CHF? So CHF is the Swiss franc. And roughly it's $1.03 to $1. So roughly they're managing about $500 billion of assets under management. And it wasn't just that what this article says, it's what the president of the company says, or the CEO. Here's what we got. The 132-year-old Swiss asset management firm Julius Baer intends to offer exposure to crypto and DeFi for its high net worth clients. Again, just like what Adrian talked about in that roundtable, follow the money. The firm's CEO, Philip Rickenbacker, nailed it, confirmed the move into the crypto space during his delivery of the company's strategy update for the next 3 years. And this is another thing they talked about in roundtable. They said that all of the hedge funds that they are talking to, they're super excited about getting into crypto. They have a 3 and 5 year plan. Their outlook is. It's not like, well, should I invest into this meme coin and 6 months be billionaires? No. 3 to 5 years. I think that's the right way to do it. That's just me, though. And this is what he states. It could well be at this very instant that we are witnessing a bubble burst moment of the crypto industry. And we all know what happened after the dot-com bubble burst 30 years ago. For you who are young, it was a different time before the internet. Dewey Decimal System, awful, no Netflix. And when the dot-com bubble burst, everybody's like, well, that's it. I swear to God, we all thought the internet would not come back. Like, it's dead. It's not going to work. It's too slow. You can't stream anything. Why would anybody invest into that? That's what we thought. I think it's the same thing playing out here. It paved the way for the emergence of a new sector that indeed transformed lives. They will transform the financial sector, crypto. And over the next 10 years, it is important for us to gain a strong foothold in this area. Again, outlook. That's why it's exactly the right moment to invest in the long-term potential of digital asset technology. I got to tell you, you couldn't have picked a better time. 1.33 trillion, not bad, compared to getting in at 3 trillion. And then to finish up, on the other hand, it's also where traditional, cost-heavy, and complex parts of the old banking system are today, just rewritten with a few lines of code. Talking about DeFi. As technology and traditional finance ultimately will converge, there's huge potential to really transform our value chains and the people that invest into it. So, again, for me, I got to tell you, this was a pretty good day, and it puts things in perspective, doesn't it? Just go like, where are we? And sometimes we zoom in a little bit too much. I am guilty of that, as you may have seen me lately. But stories like this make me zoom out and go, you know what? 1 year, 3 year, 5 years, I think we're all going to make it. Anyhow, let me know what you think about that in the comment section, and let's move on to the Q&A. Oh, real quick. Sorry. Have you guys ever heard of this? POAP? POAP. It's free NFTs that you can mint. And I'll do a deep dive later. but I just want to bring it up because I was just talking to my friend Anthony, and he was telling me about it. I'm like, I got to talk about it. There's no tokens. You can't buy it. I can't shill it. I can't do anything. It's just free NFTs. So don't be like, Rob's a shill, which is true. I am a shill at some points, but not on this one. Lastly, I will be in Consensus, Austin, Texas, June 9th through 12th. So if you're going to be there, say hi. And that's it. So now let's get into a little Q&A. And I want to mix things up with the Q&A. And I know yesterday I talked about, let me get this out of here. First of all, if you have to take off, that's great. Thanks for stopping by. I do appreciate it. Like and subscribe. But if you can stay for the Q&A, awesome. So the Q&A yesterday, I had said that what I was going to do is I was only going to do Q&A for the live streams. And then just once YouTube it was uploaded and processed, I would just delete the Q&A because no one wants to. Because when people are going through the videos and they see like a video for like 10 minutes, like, oh, I'll watch that. I got 10. Or something like 15. But if I'm going to sit here for Q&A and I wanted to go a little bit longer in the Q&A, no one really likes to click on videos that are like an hour and some change. So I was like, if I'm going to go longer, I'll just delete the Q&A part. However, I had no idea people like the Q&A so much. I was actually quite surprised. I was like, well, okay. That's what you get when you read the comments. I read them. I try to read as many as I can. So I'm like, well, here's what I'm going to do. Instead of cutting it for the live stream, well, actually, I'm still going to cut it. I'm still going to cut it out of this live stream, and I'm going to upload it as a separate video. So if you are watching the replay, you can just watch the news, and if you want to take off, whatever. But if you watch the Q&A, sure, you can do that, and I'll upload it. And the reason I'm doing that is because, let's be honest, there's some trash out there in the YouTube land. And I think sometimes the videos get overlooked because they're a little bit too long. So I'm going to chop them down and play the game of algorithm. And that's what's going on. So it'll still be available. It's going to be available for you right now for the live streams. But my friends in Europe and Australia, don't worry, I got you. I'll just upload the Q&A and you can just link it right after this video stops and it'll be in the little boxes. No big deal. All right, that's what's up.